So we have seen, aside from the outright trade tensions between the U.S. and China, other outstanding issues. China Mobile getting barred from doing business here in the U.S., of course, lingering tensions over Huawei. Even if eventually we do get a deal between the U.S. and China, what will the political scrutiny be like for capital flows in both directions?
It's a great question, Sherry. I believe there's a high probability we'll continue to see heightened scrutiny with respect to cross-border M&A between the United States and China. We are in a new normal in U.S. China relations economically. There's been heightened CFIUS review, the implementation of FIRMA, many blocked M&A deals last year cross-border with China. So I believe there's a high probability, notwithstanding a near-term trade deal, we are in a new normal, a new amount of tension. Through 2020, I see a high probability of high scrutiny.
So what have you seen already this year as compared to last year, say, in these trade tensions affecting these flows?
Well, it's absolutely had a major impact. Last year, we had seen a ratcheting up in the rhetoric and tariff activity. In the past 5 months, Sherry, there have been warmer relations between the United States and China in anticipation of this trade deal. There was a pricing in financial markets of a trade deal getting done last week. There was a high probability there, and with the breakdown in the negotiations, it really upended expectations among multinationals and investment firms. So from my standpoint, the ball is in China's court here. The fundamental deal issues that broke apart the transaction last week, it's very much in China's court. IP, protection, forced transfers of technology, those are critical points that require a renewed commitment by China in order for this deal to have a high chance of getting completed in the near term.
David, one of our guests earlier today, Deborah Elms at the Asia Trade Center, was saying that, look, China can't really retaliate to these tariffs in kind from the US, but what it can do is effectively make life very difficult for US companies seeking to do business in China. So what potential there do you see for risks?
There are real risks there always. Tariffs is always a tool in the tool shed for policymakers in China. We've seen heightened tariff activity. That is absolutely in the tool shed. We'll see additional risk in other parts of the Chinese economy with respect to negotiating mergers and acquisitions, regulatory review, MOFCOM, SAIC, how the State Council interprets and issues promulgations with respect to transactions in China. There is a vast panoply of tools that the Chinese government can use to make life more difficult in this new normal. My own hope is that the two delegations can get back to the negotiating table and find common ground to get this deal done in the near term. It would have a catalytic and positive impact for financial and capital markets in both countries.
Yeah, have you seen any statistical evidence or numbers so far that suggest M&A activity between the US and China is not what it once was?
Well, Q1 2019 was an indication of a material slowdown. We saw in Q1 2019 roughly a 32% drop in M&A deal volume compared to the first quarter of 2018. That's a massive reduction, and that comes on the back of a material reduction in M&A activity through calendar 2018. I believe that in light of the new tariff activity and the heightened tensions over the past 96 hours, we'll likely see a high probability of further reductions in M&A activity, both number of transactions and deal value in Q2 2019.